Hey there everyone. I've posted the YouTube link in case anyone can't see. Blank screens are not uncommon. You can always follow me on YouTube. In fact, I'd like you to. In fact, if you are follow me on TradingView, please follow me on YouTube as well, because it just helps build the sort of population of people who aren't getting fooled by idiots telling them to just buy everything all the time. So anyhow, don't get carried away in BTC, just listen first. What does that mean? Okay, well, right now I'm going to draw. I mean, here you can see the MP indicator. This is the thing we give away to people who subscribe to our Discord. You can see that we went into quite deep into this area. So these lines here form the support. And obviously we just pinged off it the first time, went back up to this earlier one, which you can see here. And this time we pinged deeply into it. Now, I guess when I say you got to listen to me and don't take this stuff for granted, is that really that is the area, and this is where it consolidates. And what are they trying to do in this area? Well, we don't know if they're, I mean, personally I think they're distributing again, which means that they're ready for another move down, but you know, the jury's out. We don't know, and you'll only really know when it breaks out properly to the upside or the downside. In the meantime, they know that people who got long here or think that this is the bottom and perhaps got long either here or here, they will have this as their stop loss, and so they happily search for it, because inside this area you have a lot of liquidity anyway. Yeah, these lines here are showing you the liquidity, and that is what this indicator is very good at, showing you where the liquidity is. And you can see it's found the center line roughly. In fact, one of the things I do here is I use the center line quite a lot. So for me, the center line is around here, and it will remain sensitive all the way through this. So that's one thing. And so this move up here could easily just be, you know, we've already got these people out, and you know, anyone who bought here is doing fine because they had the nuts to buy it here. And what they're going to do is probably push it up again to just above before dropping off. So what that means is that people who are climbing in, see, people would have jumped in here on the downside and said, right, this is broken, therefore it's going down. And then what we do is we stop them out, and then we do exactly the same to the people who think, right, it's broken out and we're going up. And what I can say is that this hasn't really consolidated for long enough for me to believe either move up or down. And those of you who follow Wyckoff, you know, do read the Wyckoff books, try and understand the way he looked at things. We have in our reading list an excellent book. I've actually got it here. It's by a guy called Ruben Villahermosa Chavez, and you can get it on Amazon for 20 quid or something. And it's well worth a read, because it helps you to understand what's going on here. To look a little bit deeper, afternoon to Rod Dasher, to look at a little bit deeper, I look at these volumes here and I see this big spike here, and that managed to get, now big spikes for me, let's just switch colours, big spikes for me as in spikes in volume that do a lot of work. I mean, these are generally led by the big boys, not by retail. Okay, so retail are then left to carry the can in this area here. So when there's no real volume, that's retail making it rally. And then of course the big boys press on the button again, and they get it down here and get people to panic, at which point they press it back up. This one here looks like a proper, again, big boy rally, just to get it to move up to the top, just to see. I mean, what they're doing is moving it and seeing what happens. And they get no follow through. As soon as they take their foot off the accelerator, it warbles about. And then these numbers are a bit lower, and they don't really go quite so far. And so they then take their foot off the accelerator, and this is all the way through the weekend. So you'd expect it to be pretty tedious. Easter Monday isn't a day off in a lot of places, though it was where I am. But this here on almost no volume is a little test of the downside, and that was retail pooing itself rather than anyone pushing it down. And this is the big boys pushing it back up again. And right now we've got a rally here, and this 4 hour period hasn't finished yet, not for another hour, so you've got a chance for more. But actually this looks weaker now, It's only about half the size of this candle, and we've only got an hour to go. So this looks like a weaker push up, and so, you know, we wait and we see. But like I say, all they're trying to do is take people's money off them. One way to do it is to bang out of a range and then put it to the other side of the range and bang out of the range here and then pull it back. And then anybody who tried to ride, you know, the momentum through gets slaughtered. So there's that. But I suppose the biggest deal here, let's just get rid of some of this, for me, is that you haven't had enough wiggling around inside the range. I mean, I know that sounds really sort of pathetic, but it just feels like this is going to turn into a proper Wyckoff, you know, and it may end up continuing, you know, so we may end up staying in this area, going up and down within it, basically taking everybody's money and possibly even widening so you end up with a shape like this. As each time it goes down and then recovers, you know, more and more people climb in thinking it's the end of the world, or climb in thinking it's the moon. Okay, so just be a bit careful. And if we go back to our overall, hi there to Tommy Bunks, I can see you there. And don't forget, type in if you want to talk about something else, if you want to ask questions, please do it. I prefer this was interactive, because I can't just talk about the same thing the entire time. So what I'd like to do is make it a bit more interactive if you want to ask a bit. So yeah, for me, let's go back to a wider picture on the daily and see where we are. And the other thing is, you know, everyone's getting excited. In fact, I'm going to go straight back to the hourly to show you what I mean. Everyone's getting excited because, you know, you've got this janky move up, and it looks, you know, it looks moonbound, bloody blah blah. But actually, in the grand scheme of things, it's gone from 39.2 to 41.6, and that is sweet F. That is nothing. And so now if I come out to the daily, you'll see what I mean, because if we put that in its place, I mean, we are literally doing nothing. You know, these are moves. These are moves. This isn't a move. This is a consolidation. And when you draw out, and you know, when in doubt, zoom out is a really good adage. When you draw out, you are in a consolidation and you don't know which way it's going yet. Personally, I'm expecting this one to thrust a bit higher, and then for us to come back down and then have another thrust even higher, probably as high as these areas here, which you can see there's definitely some liquidity there that the market will try and look at. And then I personally think it goes down because we're on the larger scheme, we're in this 5 move down. Some people, Elliott wave petitions, like call these WXYZs and so forth, VWXYZ, but I'm calling it ABC. It's just a 5 move down. Now, we did have a few chats about whether ABC was in, and then you just get a B push up, which this doesn't look like. So for us, this is still the favourite. We still think it's this. So we've got an A here, which we think will be at sort of, well, probably just below this C. So around 32, could go as low as 28, and then we get a super rally upwards. That's what we think. Okay, I've got some bids in around 32. You know, as those who follow me know, I bought some at 40 the very first time it hit it. So here, because I said to myself, you know, it could stop here. You know, it could conceivably stop around 40 and do its move from there. It could be a simple ABC down and then up, but it didn't do that. And so though I'm happy to hang on to those. I tried to sell them at 48.5 and missed it by $300, which is really annoying. But at the same time, you know, what was I selling them for? So I could buy them back lower. And if it does bounce up to 48 in the meantime, I'll definitely sell them. But I really want to see it down here first. What have we got? Trading time frames. Good afternoon, Paul. Would you please check ETH BTC? Yes, I will. Tommy Banks says, best comes I know. I'm always excited to see your laid back assessments of the market. It's very kind of you to say so. Please just follow me on YouTube or something, or tell everyone. Can we have a look at silver? Yeah, of course we can, Rod. But we look at Ethereum first. I think I've kind of got bored of this now. Let's have a look at Ethereum. You want ETH BTC, don't you? Let's go here. Again, these green lines are caused by the blocks indicator, which we give away free to people who subscribe on even for the month on our Discord. What am I seeing here? More consolidation. I mean, I don't look at this pair very often. Let's come out to the monthly, see if there's anything that we can glean from this. Use one of the other standard tricks, just grab an indicator, and we've only got this amount of data. So most of the action's here. If we take out the earlier part, and so take it from there, still action's still lower. Now I can see that there's a bulge here in this area, and that's backed up by the indicator again. So you are stuck in an area of high liquidity here. Now, I think if Bitcoin does another one on the floor, then some of the Ethereum sort of people can see this outperformance of Ethereum over Bitcoin, and then they really do see it, and they say to themselves, "Wow, Ethereum is the thing." And I kind of agree in that. For me, Ethereum is a better long-term prospect than Bitcoin, but I'm split. So for me, I want to have both of them. And I'm happy to be long both of them. I'm not long. I'm long a few Bitcoin at the moment. I was long Ethereum and long for a long way up. I didn't sell it at the high, but I did sell it for a nice profit from what I bought it for. And as a result, I'm reasonably happy putting it into cash for now, because we're in this sort of will it won't it stage, and I expect to see lower prices. For this pair, it's a tough one. I think it does follow when Ethereum falls. Sorry, when Bitcoin falls, Ethereum will go with it, and possibly even faster. So I do see this as something that is toppy at the moment. And if you put a gun to my head, I'd probably sell Ethereum versus BTC. Look at Ethereum USD. Yeah, let's come into the daily and have a little bit more look at it. So you can see these MP centers. I think I might just take them out. No, I might as well leave them in. Doesn't really matter. We've got levels there. Not really much to glean from Ethereum. I still think that all eyes are on the Bitcoin price, and the Bitcoin price going sideways means this will probably go sideways to better, because if Bitcoin isn't actively collapsing, then Ethereum does feel stronger to me. That's just how it feels to me. We said we look at silver. It's in here somewhere. Now this one got confusing because as you can see here, I have it down as a monthly downtrend, but it's been strong and it's been strong. And I can't remember what I last said, but I clearly picked these as levels because this is daily. So this is me being predictive then, because it was ages ago. In fact, look, I've drawn on there what I think is going to happen, and it's kind of done it. I quite like that. So I don't remember the last time I looked at this. It certainly wasn't. I don't think it was this month. It's probably here because that's where I've drawn it from. So I said it would go up and then come off having hit that line. So I think I'm pretty accurate on that. And what do I think now? I mean, along with all these things, you have to look at kind of where the market sentiment is at the moment. Things like this are beat up because of the war and the silver and gold. People don't equate silver with gold, and in fact gold is probably on an upturn. I think a lot of commodities are starting to tick up rather than down. I mean, this old downtrend one, is well and truly broken. This white Elliott wave is well and truly broken. In fact, I don't know why I didn't remove it last time, but I'll do it now. Let's get rid of all this and just try and work out if we can see anything. Again, put the indicator on to give us some clue. Maybe take it from the swing high. So that will be attractive and that will be attractive, those two lines there. In fact, I've already written those lines in. The three white dotted lines are the ones. Let's turn the indicator off. And also get rid of that. So yeah, I mean, I'd anticipate in silver a bit of sideways action based around this. So we can come back and look at that in a few weeks and see if that was right as well. I mean, might as well, while we're here, look at gold. So gold, we're bullish of, and we're waiting for a pullback to get in. So that's where we are in gold. We see this potentially as the pullback level, because those of you who understand Elliott, even the slightest bit, know that Elliott waves a fractal. So within this 4 to 5, we're expecting a 1, 2 at some stage, 3, 4, 5, and so we're waiting for the 2 and hoping it comes along. Sub 1900, we'll be looking to get in. There is a lot of liquidity in this area. I can see it. So it may only go as low as sort of low 1900s. Again, let's use the old just since the swing high and see where the action is. There you go. Well, what's that line? 1930. Yeah, so that's probably an adequate enough pullback. So 1930 would be, drawn that out, 0.618 pullback. So you kind of want that. You want it to be at least that, really. I mean, a 0.5 as a 50% pullback is enough. 618, given the level of that area of interest there, I say that might be all we get in gold, and so we might be looking, wouldn't put you off having a little go at 1930. Your downside, which is, what's the low here? Low on my screen, 1890. Okay, so you got $40 downside and a hell of a lot of upside. So that's not too bad a trade. Not investment advice, as I've got to say. MW, Paul, to your latest post about the recession and stuff, what would you recommend to do? Capitalise it, short everything, long USD. Well, as I said, let me just deal with silver a sec, because Rod Dash has just come up. Thanks for silver. Trying to learn with paper trading, but I can't find too many opportunities. Well, there aren't actually. Well, that's good. Not finding too many opportunities is excellent, because the whole point is you shouldn't be trading every week necessarily, unless you really love doing it, in which case off you go. But in terms of trying to make money consistently, we still haven't put our Aussie US trade on, but I've been waiting over a year for it. But I'm happy to wait for it because I want a good one. I don't want a number of mediocre nonsense trades. But in terms of this one, in silver, you're trying to learn and you haven't found very many opportunities where you apply all the criteria for strong cases. Well, you haven't had a strong case. And they're flipping back to silver just for a second. Did you miss anything? That's got to be the question. It's 24 to 26. That's 10% range in a month and a half. Have you missed much? Not really. Were there any obvious trades? Did it bounce off any obvious levels? I've got to say, not really. Is this in fact a giant consolidation, which is just left out? I mean, one thing you could spot here is if you take this kind of range as the consolidation, we've broken out of it, come back in, and now we're doing a second retest. I mean, that's one way of looking at it, and you can tell there's action here because it happened. Oops, it happened there. I mean, there's nothing obviously spring-like about this or this. But you can see this is just a massive consolidation. Now we're fiddling around at the top of it. And, if you do get any decent traction upwards from here, then it's had two goes at it. Second retest, guns to my head, I'm buying silver, not selling it. Going back to recession and stuff, my post about the recession, which we're talking about this one, where I'm picking it to come off a bit, scare everybody the living daylights out of it, and then just rally. And the reason, if you haven't read the idea, and I do recommend you read it, because I write a reasonable amount. It's not like a 5-line thing, and I can't go through all of it now. is that you quite often get a big sort of unexplained rally just before. It's obvious to everybody, myself included, that the world should head for recession now. UK certainly looks set for one, and the US similar. but there's always a delay. Stock prices are driven not by how people feel. Their sentiment is a thing, and they're driven largely by results from companies, and companies don't necessarily do too badly just before the recession starts. You know, they're reporting, they're kind of a lagging indicator, and the prices reflect it. So what I was saying in that, and what he's asking, is what do you recommend to do to capitalize it? Well, long USD in a recession, maybe, but I guess what I was saying in that post was that you may find that there's a nice old rally after another scare. So the scare will be caused by either the war or more recession fears or similar or something like that. And then after that, you get a sort of, a vacuum. And people sort of buy it back after a while, and then the people that haven't bought it back yet have to buy it back, and you get a short squeeze, and off we go again. And that's kind of how I feel. So what I'd say is buy the dip in stocks. Okay, so if you want to take advantage, but be ready to exit. I mean, it will happen. You know, it will go up, and then it will collapse. You know, there will be a recession. The trouble is, a lot of people think there's going to be a recession, which means the prices won't reflect it. You know, it's after everyone thinks, oh, sod it, it's all going up anyway. I don't know why I thought there was going to be a recession. You know, everything, all the evidence is still there. It's still going to be a recession. You know, the price is just going against you. And the secret is to wait until you can't believe your eyes. You're saying to yourself, I'm glad I didn't short it right here or even a bit lower here as it starts to bite, because actually I could have sold it for a lot higher here. So for me, the trade is to wait and to get long things like, you know, at the bottom, well, if we go back to S&P, so I'm calling it down to sort of this level again, just enough to scare everyone. You know, 4,000, maybe slightly sub 4,000, just because then people see this as a downtrend, at which point, you know, the shorts come in and then nothing happens for a while and it starts to creep up again, and before you know where you are, it's going up. And that kind of, and one of the things I don't talk about in the idea is how that fixes in with the FX markets, because we are looking at Aussie US and we're waiting for this one to come down, much like gold, because this looks like a nice one. We're looking for a 2 perhaps down here. So that's kind of, you know, what we think. You know, if you're going to take advantage of this rally before the recession, then you want to get into stocks on the next big dip, certainly if they make new lows, and also into Aussie US, as long as it doesn't, you know, you'd end up with your stop loss below here, because that breaks the pattern. So that's kind of enough for today, I think. If Bitcoin carries on moving and makes a decent move, then I'll come back up tomorrow. If it carries on within the range, perhaps not. I'll decide in the morning if it's moving. I'll trade again. Don't forget your Mayfair MP. Where is it? This thing here, which is a pretty useful thing. So, for example, in Aussie US, it picked out this level here, which it's now come back to straight away, and you've got a big fog of liquidity here, which is what we're expecting to pull into at some stage. We're expecting this kind of move before off we go. Okay, so that'll do us. I'll see you next time. I'll put it up in the morning so you know when I'm on. Please follow me, as in subscribe to me in YouTube. Just click the link at the top, go and subscribe, and then more and more people get involved. And you know, oh, there's one thing I wanted to talk about in Bitcoin. Oh, nearly forgot. Moon Carl yesterday, what a genius. He's really come out with some of the best tea I've seen in ages. So his levels over the last few have been quite good fun. So he bought up here, he had a 3.5 million long position. He wanted to buy in both these positions. He wanted to buy in both of these positions. He wanted to buy on this rip, crowing about he was long. He'd made 250,000. I haven't written that one in. In fact, I'm putting that in now. He was actually 245, but yeah, I called it 250. It then says to buy here. Oh, sorry, let's move that out of the way. So he got caught, probably the most amateurish trade he's done yet, in that massive spike. Nice one, guy. And here, yesterday, or this morning, or no, yesterday evening, Bitcoin could crash to 13,000 now. Bear flag. And what have we done since? Gone up straight in a straight line. This guy is a retail trader. And I'll leave you on that bombshell. Have fun.